all of a sudden, one of the first things mentioned this morning today was Gilead, G-I-L-D, in our room today. And we always start, when we analyze a stock, guys, we always start the daily chart. Gilead was gapping over a green bar here this morning. And what was mentioned this morning right off the bat was the 5-minute buy setup right here over this high here. And you can see here on a 5-minute buy setup, you could have entered this thing at 48.85 was the entry, 48.61 was the call. 85 by 61. So we're talking about a 24-cent stop. Okay. If you managed it on a pivot, a 5-minute pivot method, you'd still be in the stock. There's been no reason to sell. And right now the stock is at 49. We'll just call it 49.60. Subtracted from the 48. 75 cents on a 14-cent stop. There's 5 times your risk right there on that one trade. If you would have taken this 5-minute buy setup here and you still held it based on a 5-minute pivot, there's no reason to sell. You'd be over 5 times what you risk. So if you had a $100 risk, if you risk $100 and you have a 14-cent stop, guys, you could have picked up 700 shares if you round it off, and you'd be up over $500 now on that trade. It was an excellent call. Mario actually mentioned that, and I agreed with him. And what I wanted to tell you about this, guys, is on the Gilead, when we look at stocks, we always look at all the different time frames, the 5 different time frames. First of all, right off the bat in the first 5 minutes today, Gilead opened at 48.52. Yesterday's high was 48.81. But if you go to the 5-minute bar, the first 5-minute bar, it got over 48. It got up to 48.90 here. So it got over yesterday's high. So when we triggered this buy setup here, Gilead was over yesterday's high. It was above the open, and the daily would have been bullish. Everyone type a 1 if they understand why the daily time frame was bullish at that time. Just type a 1 yes, type a 2 if not. So give me some 1s or 2s if you understand why the daily was bullish at that time based on what was occurring. Just want to make sure we understand this concept before on. I know it's pretty simple, but I really want to talk. I know the room members know this. Fred, you don't understand? If you do type a 2, tell me what you don't understand. Why you think? Tell me if you think why the daily would not be bullish at that point. Now again. It had to trigger above 48.81 yesterday's high, and this morning that very first 5-minute bar got all the way up to 48.90, so it got above yesterday's high. So Fred, tell me what you don't understand. You said you typed a 2. You don't understand why the daily time frame would be bullish, but the daily time frame in fact was bullish. So that's the first thing we look at, or that's the first thing I would recommend you guys highly look at. Okay. Now, secondly, we go to the 60-minute time frame next. Okay, so Fred says, I see it broke above the daily resistance area, but I don't understand the gap over the topping tail. On the daily chart? Okay. Now again, Fred, what I'm just saying is, would you we opened up and we got over that topping tail. Overall, just on the daily time frame, and I'm talking about right here on the 5-minute chart, right here at 5-minute chart here, and it pulled back. Do you understand why at this time when this triggered here over 48.84, this was a 5-minute buy setup over the high of that bar. When that triggered here, do you understand that the daily would have been above the open, so the daily bar would have been green because the stock opened at 48.52. If it's trading at 48.80, it's above the open, hence the daily bar would be green. So do you understand that the daily bar would be green? It would be bullish from that standpoint. Does that make sense, Fred? Okay. So the daily time frame is bullish and with us, and you also took over yesterday's high. Now you might say you might have some resistance here still at 49.48, but it's only one pivot. One pivot's not a big deal. Okay? So what I'm trying to get at is the daily was bullish. Now we go to the 60-minute time frame. It is the gap play, I guess I don't get, but I don't study gaps. If it's a gap play, I guess I don't get it, but I don't study gaps. Again, I'm only trying to get at this point, Fred, I'm just trying to get to the point when we look at every stock before you enter something, if you can get all the time frames in your favor, whether it's a gap, whether it's not a gap, whether it's flat, whether it's high, low, with a fox in a box, with a goat on a boat, it doesn't matter what the gap is. I'm just trying to say at this time frame, in this particular instance, once it's above the yesterday's high and above the open, the daily time frame is bullish. I'm not talking about any of the other stuff, okay? Okay, so the daily's bullish. Now we go to the 60-minute chart at that time frame. On the 60-minute chart, okay, remember this is the first bar of the day, so let's move back the chart. And this was the first bar of the day right here. This is what the 60 looked like when this triggered. Now guys, type of 1 now, do you understand why the daily with the 60-minute time frame is bullish right here? Does everyone get that? Type of 1 if yes, type of 2 if no. I want you to understand this is very important. Okay, Fred gets it this time. Daryl gets it. Robert, Mara, thank you. Michael, John, thank you. Okay, so we have the two biggest time frames. Now, guys, we can look at the weekly and monthly, but we're intraday traders here. We don't care as much about the weekly and monthly when we're intraday trading. We've got the daily on our time frame. We got the 60 on our time frame. If you can get all 5 time frames in your favor, you're going to have a much higher odds of making money. Okay, guys? Often we'll fall in love with one time frame, a 5-minute buy setup or a 15-minute breakout or whatever the time frame might be. One time frame will look great, but the other ones won't. If you can get all the time frames in your favor, you're going to have much, much, much higher odds of success. Okay? And if you get the 2 as highest time frames in your favor, that's really going to be important, because if what's stronger, guys, a 1-minute chart or a 5-minute chart? Type of 1 or a 5, what's stronger, a 1-minute chart or a 5-minute chart? Type of 1 or a 5, what's stronger? Okay, and what's stronger, a 5-minute chart or a 60-minute chart? Type of 5 or 60. So the higher time frames are always going to be more important. You guys are right on track. Perfect, perfect, perfect. You're right on crew. So we've got the daily in our favor. We got the 60-minute in our favor, right? Now we go to our next time frame that we focus on is the 15 and the first few minutes of the day. And we're, again, for people, I see a few people, Faye, and a few people just checking in for the first time. We're going over a trade that was called today in the room and why it was such a good call. And what you should be looking at every time is have all the time frames in your favor. So for anyone coming in late, that's what we're focusing on right now. We're looking over the first call of the day today and why it's so important to have all the time frames in your favor, and how if you do, you can really increase your odds in making money. Okay, so now we go to the 15-minute time frame. This is what the 15-minute chart looked like somewhat today. The first 15-minute bar was here. It went up to 90 and it came in. So the 15 had a bit of a topping tail, but it still broke above these 2 previous pivots. So, guys, type the letter A if you think this was bullish when it pulled back here. And again, the trigger. Hang on, let me before you answer, don't answer yet. The 5-minute buy, let me go back to 5. Okay, the 5-minute buy on Guild the trigger was at 484. So the 15 would have been right here at the time. So this would have been green up to here. So this it wouldn't have been a topping tail. It would have been green most to the very top of this bar. So over that bottoming topping tail, and it would have been green from here all the way down to here. Is that 15-minute pattern at that time bullish? Type an A or type a B for bearish. A for bullish, B for bearish at that time right there. So now Anna and Daryl says A. No one else says anything. Okay, John, thank you. Rita, Mara, okay, thank you. So now we've got the 3 biggest time frames in our favor. Now let me just go on and you guys got the idea. Now we go to the 5-minute chart. What is that this morning? The 5-minute chart was here, and this was bullish, and there was our trigger. Our trigger was right here over 85, so not quite yet. There's our trigger right there. Once it got over 84. So now you got the 60, you got the daily, the 60, the 15, and the 5 all in your favor. And of course, when that happened too, the 2-minute also. Let's look at the 2-minute just to be thorough. The 2-minute at that time, when we got to 85 this morning. Let me just show you what it looked like so everyone knows, and no matter what time frame you're trading on, you can see what it looked like. Whoops, today was the 10th. So the 2-minute would have been right here. Once it got above 85, it would have been right here. So the 2-minute was right there. Right there is a 2-minute. And you can see the 2-minute made a higher high, higher low, higher, and now it's making a intermediate higher low and higher high right there. So every single time frame is in your favor. Every single time frame is in your favor, and hence you made 5 R's if you traded on a 5-minute pivot method. And if you did, you'd still be in. And now our stop would be moved to just under 49.32. And you could have taken some profits anywhere through here. Does anybody have any questions so far? And if you do, go ahead and fire them out on this entry. Does everybody have any questions on this one? Any questions? Make sense? Does that make sense, John? I know John, Daryl, does that make sense? Why was it a good trade? Okay, so now let me ask a tougher question. How many of you guys make sure you look at every time frame before you enter a trade? Those 5 time frames. Type of 1 if yes, type of 2 if no. You look at all those 5 time frames before you enter a trade. Daryl says no. He's the one honest guy here. John says he does. Okay. Anna says 1.5. Mara and Brenda say yes. Hey, Brenda, welcome back to the room. Rita says sometimes. Thank you for being honest, Rita. How about a few more responses? Michael says he looks at it every time. So Daryl looks at the 5 and the 60. Hey Daryl, are you if you don't mind me asking, and you can private message me if you don't want to put out the room. Are you a consistently profitable trader? Just curious. And you can private message me if you don't want to. But if you don't mind putting it in the room, you can send it in the room as well. 5 and 60 is very important. Does everyone? Okay, 70% of the time. Okay, cool. Does everyone see? Does everyone understand? If you had all those time frames in your favor, how that could really be powerful for you, how that could really increase your odds. Does everybody get that part? Give me a yes or no on that. Does that make sense? If you can get those 5 time frames in your favor every single time, it's really gonna. Did this? I know you guys have heard this before, especially room members, but is this helpful? What I just went over? Does this click maybe your light bulb for somebody? I know you guys have heard. Some of you guys have heard this before. I've even said it recently, but. Does everyone see a little helpful? While this can really increase things for you, really make trading a little bit easier for you. If you just don't, if it doesn't have it, you don't get it. You don't take it, right? So let's go over another one that was talked about this morning. I mentioned it, and let's go over that one. And I think this one never triggered, so there's no sense to go over that one. I called ADTM, but it never triggered, so there was nothing there on that one. Okay, another call that was mentioned this morning in the room was HMA, okay? And HMA was on the list. You can see here, guys. Here's our list over here if anyone wants to know. Anybody that's room members, we go over at 9 o'clock. We go over the gaps in the morning, and we put all of our bullish and our most bearish down here. And the ones at the top are my favorite bullish usually, and my ones at the bottom are my favorite bearish, near the top of the list here. So I had BBY as favorite. Actually, Guild wasn't even on the list this morning, but it was mentioned right off the bat. Mario mentioned it, and I agreed with him when he mentioned the call, and you know, that happens too. But these are only the gappers that we've got on the list here. Doesn't mean you can't make money in other stuff as well. So HMA was one that was on our list today as a short. Pre-market, we talked about this short. And let's look at HMA real quick. HMA was a pullback buy setup here, guys. Looked like it was in a strong uptrend here. And now what happened today? What happened here? What happened here? But what does this mean right here on the daily chart, guys? What happened with HMA? A gap down, but besides the gap down, what does that mean as far as the daily trend goes? What happened? What happened to the daily chart here? Broke it. Anna's got it. Daily trend's broken, guys. Higher high, higher low, possible higher high, and boom. Now once we got gap below that, we have a for sure lower high, and now we have for sure lower low. The daily uptrend is broken. Is that going to create? You think there's some people trapped right here, guys? All these green bars. You think there might be some people trapped in this right here? This is why gaps are so powerful. If you get the right ones, you know what you're looking for. You're trapping all these people in here for the last month of March that they've been loading up on this HMA. Now this thing gaps up, down this morning. They're like, oh my goodness, what am I gonna do? This thing gapped against me, right? They're praying for things to turn around. Absolutely. So ideally, the best gap would have been if it just gapped below 12.16. So it gapped a bit too far. This is what we call a gap too far. So when it's a gap too far, I typically do not take the first entry on a gap too far. So we can all agree because of this, the daily is bearish on this gap alone. The daily is bearish. Now let's go to the 60-minute chart. Again, guys, if you analyze your stocks every time like this, it's going to really increase your odds in paying dividends. Okay. HMA on the 60-minute chart. Let's go to the 60. So the first bar of the day, you can see also, well, it was green at first because it was up here. Okay, so it would have been green up here in this area, but you can see it was a topping tail, which is negative. We go to the 15-minute chart, the first bar of the day. And this one is a little bit tricky. It came down here and came back up again. Well, ideally, Anna, I like them to gap. I like them to gap less than 40 cents under the previous resistance. This one gap over $1. So if it gaps more than 40 cents, I think it's usually a gap too far for me, and I want to see an alternative entry. I'm looking at the four. Oh, geez, thank you. Let me go back here. There you go. There's the 15-minute. Thank you for keeping me straight there, Scott. Scott's very technical like me and very specific. So he always is. I appreciate that he's in here. He's always correcting me if I make a mistake and I need somebody. When my wife's not around. Anyhow, so the 15-minute here. The first bar of the day you can see was kind of green. It kind of did counter. And this is what happens a lot of times when the gap is too far, guys. When the gap's too far, you're going to get some type of a counter move, right? So the 15, you can see the first bar of the day was kind of bullish, right? It was green, so that, I mean, it's bearish overall, but it was bullish. You can only say this is mildly bearish because it's bearish in the sense on the overall gap, but because the bar is green, you can only say it's mildly bearish at best, right? Does that make sense to everybody why I'm saying that this is only mildly bearish? Type of 1 if that makes sense, and if it doesn't, go ahead and tell me why not. Because the daily is definitely broken, but when it's green there, you obviously could be some kind of a counter trend. So you can't really say that's overly bearish when you're getting a green bar there on the bigger time frame. Okay, cool. Just want to make sure we're on the same page there. Now let's go ahead and go to the 5, and now look what happened here, guys. We got the nice big old green bar, the first bar of the day, and now we got the big old red bar. Now, if you were aggressive here, you could have taken it here on HMA right here. Wait, is that right? Wait a minute, I went too far again, didn't I? Yep, I did. There we go. So here's the second bar of the day. So this is bearish still. But it's got a bottoming tail, so it's only mildly bearish at best, right? And then the third bar, this has got to be bullish, right? It's making the higher highs inside this topping tail. And now we're way up here. Now, if it breaks this high right here, guys, Fred says COH. For anybody who's trading right now, COH is breaking out of daily resistance. Thanks, Fred. COH breaking out daily resistance. Thanks, Fred. So if it breaks over this high here, guys, for me, it's not going to be quite as good. 18. And it went right up to 16. So a possible double top here. That's see that, guys? Possible double top. Now you got the engulfing bar. So this is the first time on a bigger time frame where it could possibly be some bearishness. So I said here that you could take this here under 11 and your stop would be over the high of the day. It's a big stop, I said at the time, but I said it was a stop that you could take 1099 by 11.20. It would have been a 21-cent stop, which I said at the time was a big stop for that stock, but it is you could take it. And you can see it went right down. Now, any thoughts from anybody on this entry here? If you didn't want a 20-cent stop here and you wanted to take this entry, anybody have any thoughts of how you could have done this differently? And you can say DK if you don't know, just type the letter DK. But if you didn't want, if you wanted to get in this, but you didn't want to, you're saying, gosh, a 20-cent stop is kind of big for me. Any thoughts of what you could have done here differently in order to get in this entry right here when it triggers? So Rita says a 2-minute chart. Daryl says he doesn't know. Anybody have any other thoughts? 1-minute chart. I like it, Brenda. 1 and 2-minute chart. Okay, like it. All right, so now let's go back and look here, guys. This was at 9:45. Let's go to the 1-minute chart first at 9:45 and see what we got here. So on the 1-minute chart, we've got the lower high here, and there's the 11 right there. And you got a little bit of a green bar right here. It's trying to reverse here, and you had a trigger. It triggered, but then it traded flat here, and then boom. So you got a double top and a lower, a little shelf breakdown here. So you could have, guys, if you're really aggressive, if you took the 1-minute entry, you could have played this under 11. It says 1101, but we want to get to break the whole number. So you could have played 1099 by 1107. Everybody see that? 1099 by 1107. If you have the 1 minute, if you have that in your plan. Daryl understands. Does everyone else understand how you could have played the 1 minute if you felt confident in it? Now, guys, how do you feel confident in taking this trade? How would you have felt confident taking this trade? And you can say DK if you don't know. How do you feel confident taking this 1-minute trade? How do you know that's going to work? My gosh, it's a big gap, and man, Rick, it could go the other way easily. Stats. Yeah, but you can take stats on everything. So stats are helpful, but well, of course, you always want to put a stop in before you take a trade. And for any of you guys that take a trade and you don't have a stop beforehand, and I know there's some of you out there. I know there's one person in this room particularly. I don't know if she's in here now. It's a very bad thing to do, in my opinion, because what happens, guys, if you take a trade without a stop already in your mind? What happens? What can happen if you take an entry, you don't have a stop in mind? What's the first thing that happens by not having a stop when you take a trade? You change your mind, you panic. That's one thing. What's another thing if you don't have a stop beforehand and you don't put it in? What's another thing that can happen? You lose money, but yeah, but why? What's another thing that can happen if you don't put that stop in ahead of time? What happens if it gaps against you really hard? Then what? Oh my gosh, you're really scared now, right? You're like, oh my gosh, he gapped against me. I should have gotten out. I didn't. And then what happens? What happens when we get in a stock that? What happens when we get in a stock that changes direction really quick and we don't? Yeah, you freeze. And what happens when you freeze? Well, what do you do? What kind of decisions do you make when you freeze? You stay in. Anna's absolutely right. You stay in. You panic. You're like, I don't want to take a little shot here. You freeze and you stay in. So, for all those people who don't have a stop, what's the other thing though, guys? How much can you take? You don't know what if you don't know what your stop is before you enter a trade, you have no idea how much risk you can take on this trade. So you might be risking too much, you could be risking too little. You don't know. So you got to know so you can risk the same amount every time. And the reason you want to risk the same amount of time, what happens, guys? What happens when you don't risk? Yeah, you create consistency. What happens when you don't take the same risk. Now you can always take half an R, but let's say you take a bunch. Let's say you take a, you take $500 risk on one trade and $100 risk on the next trade. What happens if your size of your trade is like that? It's real erratic like that. What typically happens? Well, you lose, and what's the other thing that happens? Which one is the good trade? The $100 trade, the $100 risk, or the $500 risk? What always seems to happen? Well, yeah, isn't it funny how that works, Mara? Isn't it funny? It seems like the one that you risk the most on is the one that you end up losing the most on, right? It seems to happen that way a lot, right? Does everyone agree with that? Does everyone see in the past? Type of 1, if that's happened to you in the past, it seems like that's what happens to you. It's like, gosh, it must just be me. Type of 2 if you think I'm crazy and that doesn't happen to you very often at all, which, I probably am crazy. I'm no animal type of 2 anyway, but yeah, you're crazy, right. So it's real important, guys, that you put your stop in ahead of time, because sure enough, you don't do it, that you get a quick gap against you, and then you're frozen. So who hates that feeling? I hate that. And isn't that the worst feeling, Daryl? You get that that gut feeling in your stomach. You just feel like you're feeling helpless. You're like, oh my gosh. Then what are you doing? Instead of having a trading plan that you're trading on a prayer, and you're praying that the stock comes back down again, right, Daryl? Yeah, you want to throw up, and you're just hoping, and you're sweating, your armpits are sweating, you're nervous, and now you're just praying instead of trading a plan. And no one wants to feel like that. No one wants to be like that. So that's why it's so important, guys, that I know I overdid it with that analogy, and I know I overdid it, but I know all of you guys, if you've traded long enough, especially early on, we've all been there before, and it's the worst feeling in the world. So if you have a stop, you stick to it every time, you're good. And how do you know you take the stop? You do it every day, right? You do it every day. And what's another thing you can do? You can always take a half an hour here, right? You can take a half. Here's another thought. Here's another thought, guys. Couldn't you? Okay, let's say your risk is $100, right? Here's another thought for you. Let's say your risk is $100. Could we enter half of the stock? Okay, so it's a $100 risk, just to keep it easy math, right? So our entry is 10.99. Our stop is 2 cents above the high of this base, which is 105. So we'll call it 1107, right? So that's an 8-cent stop here. Couldn't we stop half of it at 8 cents? So 8 cents into 50, I can get 600 shares, right? $50. That's half of 100. And then here, 10.99 into 18, I can get about 200 shares there. So I could buy 800 shares total, sell 200 at this risk. I'm sorry, sell 600 if it breaks out here and 200 there, right? Does that make sense, guys? So you could do a half. If you're good enough with the math, and you could have done 600 shares for 1107 stop. You'd take a half an hour loss, and you do 200 shares for the bigger stop, and saying, I want to be in this all the way. Let's see what happens. We're still in it. We haven't gotten above 1107. We haven't gotten above 1107, and that stop was 11.99, 10.99 by 11.07. That's only an 8-cent stop. Oh my goodness, an 8-cent stop, guys. An 8-cent stop. Oh my goodness, an 8-cent stop. Oh my goodness, an 8-cent stop. The 1 minute is still in a downtrend, and we're still got an 8-cent stop on 600 shares. 8 cents. I don't add on a 1 minute GBI, Rita, me personally, but if you have stats that show you can, by all means do. You could have added right here. She's right there. You could have added here, but here, if you would have added under that GBI, I would have used 84. Your stop would have been over 98. It's a bigger stop, right? Because you got to use that topping tail, right? So that one would have been a bigger stop than our 8-cent stop back here, right? You see that, Rita? So that one wouldn't have been such a good one, right? You had a tighter stop here. This was only 8 cents. This was 16 right here, right? And then this GBI, well, it never triggered till down here. Does that make sense, Rita? That one didn't work out, so that was a bigger stop there for that GBI. So it wasn't. You want a GBI with no, and then it just goes underneath it, so then you can have a tight stop. Does that make sense? Okay, cool. So let's keep going. 8-cent stop, guys. 10.99. We're up 10.99. We're up 39 cents on an 8-cent stop on half those shares. 39 cents into 8, guys. That's almost 5 R's on the back half if you just did that. Oh my gosh, now it's down to 50. Now 49 cents on an 8-cent stop. That's 6 R's now. That's 6 R's down here at 50. We're still in a 1-minute downtrend. It hasn't broken yet, right? Okay, now we got a pivot here. A bit of a pivot. It's not a great one. And you could sell some here over 64. Let's see if that happens. It would be 66 would be your stop, 2 cents above there. Let's see if that happens. Okay, there you go, 66. So 66.98, 66.99. That's 33 cents. 8-cent stop. There's 4 R's right there. 4 R's. You made 4 R's on that part of it, and you got out on a 1-minute higher high. I'm just giving you one possibility, Anna. I'm letting you guys think a little bit. You could use a 1 minute, you could use a 2 minute. You do it based on how much void's left in the chart. Also, you do it based on doing the same thing every single day, right? So if we stop out at 1 R, you just made 4 R's here. You can make 4 mistakes a day and still break even, right? or 3 mistakes a day, still break even. So now let's go to a 5-minute chart on HMA. And you can see here it got, oh my goodness, look at this, guys, on a 5-minute chart. Here's 68, and it went up to 68, double top here. You could have shorted again possibly, or if you have not, what I'm saying is, look at, still making lower highs, lower lows. And you'd still, on a 5-minute chart, it's still making lower highs and lower lows, and your stop could be now at over 60. You'd still be in this thing right now. So if anybody doesn't think that they can make money day trading, I hope now any of you guys that